Next up, we have Mr. Price Group. Is a value-orientated, mostly cash, fashion and home goods retailer with a market cap of 66 billion rand. It trades on a price to earnings ratio of 29.8 and a dividend yield of 2%. Look at that market cap. I mean, this business has done fantastically well. It's the darling of the JSE. Had another sales or earnings update a couple of weeks ago, growing earnings by 20% again, yet off a higher base with a consumer under pressure. They're stealing market share. You know, they just can't go wrong, these guys.
So whilst the service offering might be Mr. Price, the share price feels like it's Christian Dior, if you know what I mean. But they continue to deliver above market expectations and better than their peer grouping. So they're looking at a LSM grouping in a South African context that has grown. So we're talking about young professionals who've got money to burn in terms, want to look stylish, but know that they only have enough money to afford this season's this season's fashion.
Because even if that shirt does get holes in after 2 years, it's out of fashion anyway. So, you know, you've spent 90 rand on it and it's not the end of the world. It's done its due. It's paid its due, and it's been worth the 90 rand you spent on it. Having said that, though, I feel like Mr. Price has sort of shifted the LSM groups because its buying's been so good in terms of, you know, predicting the fashions and getting that buying correct. They've been able to afford a bit of a premium. So over a period where the South African consumer has been under pressure and everyone's been fighting hard for market share, Mr. Price has been able to increase prices without sacrificing much on the sales side.
Exactly. So they're in the sweet spot. If you look at in terms of their grouping in the clothing, 75% I think of people are in LSM 6 to 10. That's in the clothing. Now, that's not the same in the home stores. That's like more than 95%. So definitely people who got money to burn on clothes. So I think what that tells you is when the going is tough, people shop down a little bit at Mr. Price, but when the going is good,
they just buy more from Mr. Price.
Exactly.
Yeah, and obviously they've got a great online retail presence. And unfortunately, I suppose it's a good problem to have, but often when you go to Mr. Price, there's a queue for days. So you prefer to buy that stuff online. And then, of course, they got Mr. Price Sports. You know, why do you want to go buy that camel pack for 1,200 Rand when you can get the Chinese equivalent for 200 Rand? That works just as well with a max sign on it.
Yeah, exactly. So, I mean, we live in a country, and I know you're passionate about outdoors and sports, but we live in a country where we've got beautiful weather most of the time, except for those people in Cape Town.
At the moment.
And, you know, affordable sporting goods with their own name brands. You know, maybe the Sharks would have done better if they were still sponsored by Mr. Price.
Yeah. Celsey hasn't done so well for them.
For the Sharks, yeah. Come on, Stephen.
So, high price to earnings ratio, lots of high expectations. I suppose if you avoided this one in the past because it was expensive, you would have missed the boat completely.
Going forward, I can explain it.
We've seen a bit of a sell-off if you have a look at the share price. Maybe this is a buying opportunity.
I think I can explain it. The last set of numbers suggested that 51% of the business is owned by foreigners. So, you know, it would be exactly the same as you and I going into an emerging market saying, clothing retailer, selling cheap stuff, you know, I don't really mind if I pay a 20 or 25 multiple because I'm willing to be in this market for the better part of 5-10 years. On your mark, set, go.
So, hot or not?
Yes.
You're hot on that one?
Yes.
I'm also hot. We don't own it in the portfolio at the moment. We'll see what we talk about later when we choose what we're going to do.